Good morning everyone and welcome to another RF Crypto video. Today's markets have gone up slightly. It's not a big deal. 2.1% isn't that much. Bitcoin has gone up, Ethereum has gone up, but it's not much of a move. Ethereum is pretty stable at the 1,700s to the $1,800 levels. The rest of the market is performing in a quite mediocre level. Everything is between 0 and 2.5%. Obviously Chainlink is up by 8% due to company specific factors that it doesn't even matter because this coin is quite volatile with its price. So the fact that there is a lot of talk of network connectivity is getting the buzz up because Chainlink is one of the company that bridges networks. As you can see, the rest of the market is a mix and match of red and green, and we converged that to 2.12%, and the global crypto market cap stands at 1.25 trillion, which isn't much considering that a few months ago it was close to 3 trillion. As I stated yesterday, the price of Bitcoin saw a massive tumble and it went from about 31,370 all the way down to $29,000. However, we have seen steady recoveries. We saw the bulls getting back to the market and 3 significant green candles successively, which pushed the prices above the $30,000 resistance level, which is the new support level, and the prices were moving towards the $32,000 resistance level. However, the bulls quickly got back and you can see this massive dip in the market. People are probably selling off to cash in on these 3 green candles. However, the consequence was that the price dropped significantly, and it dropped so significantly that it went below the $30,000 support level and it was heading down towards the $28,600 level. However, the bulls quickly got back in the market, didn't allow this to happen, and pushed the prices right back up, and now it's standing at about 30,450. And if we zoom out, we can see that in the last month the price of Bitcoin has been trading up and down, but the average has been 30,000, and this is still where it's trading at. There has been no developments in the markets with relation to any significant price movements. The average has remained the same. Looking at the price of Ethereum, no real movement. The price is still between the $1,700 support level and the $1,850 resistance level, and it has been trading between this. If we zoom out, for the past 2 weeks or so, before it was trading between 1.8 and 2,000. However, there were some negative pressures on smart contract platforms and the prices eventually dropped down to $1,700. It moved back up to $2,000. However, it never made it above that, and now it's trading between 1.7 and 1.8, and it seems to be this way, and it seems that it will be this way for the foreseeable future because there has been no development in the Ethereum network. We have to see when Ethereum 2.0 comes out. I think that's the only time when the price of Ethereum will actually go up. However, please note that once they announce that yes, this is the date that Ethereum 2.0 will roll out, on that day the price of Ethereum will shoot up significantly, and then it will drop back down and stabilize. And when Ethereum 2.0 comes out, then the increase in price won't be as significant because the price increase was already done, and that increase was priced into Ethereum when the Ethereum 2.0's launch date was announced. So moving on to some news, they say that in terms of inflation, they don't think that the Fed can solve it alone. Investors are anticipating the Fed to hike interest rates by an additional 50 basis points, which is about 0.5%. In May, the Fed increased its rate by 0.5%, which is the biggest hike since 2000. Due to the fact that inflation is at almost 40-year highs. The Fed hiking rates or tapering its balance sheet is likely to have a minimal impact on macroeconomic headwinds, and these macroeconomic headwinds are just factors that are causing the high rate of inflation and low rate of economic activity and economic growth. For example, the invasion of Ukraine is pressuring global commodities, which is causing the prices to go up. China's lockdowns, which have decreased its production in all areas from manufacturing to mining, has also decreased supply, and demand being as high as it always was, it causes the price to go up. Adding to this, the decreased supply of oil from Russia, and when the price of oil goes up, not only does petrol become more expensive or diesel become more expensive, but everything that you consume is transported in one way or another, and transport uses fuel. So if your fuel costs go up, then your transport costs go up. If your transport costs go up, then the goods that are being shipped on the transport method, their prices also go up to compensate for the increase in transport costs. So any increase in costs at a primary and secondary level gets passed on to the tertiary level to the final consumer, which is you and me. These are the factors that are causing the prices of everything in your grocery store, in your electronics store, to soar. So the consumer price index, which measures inflation, was at 8.3% in May, which is significantly high. And the Fed has been trying to respond to this. It has been using tightening monetary policy, which is to increase interest rates, which is to decrease its balance sheet in order to remove money from the market so that there is less economic activity, so that inflation goes down. However, the economy still continues to be overheated. And what's interesting is that the expansion phase of this cycle is already slowing down, which means that the economy is already slowing down. However, inflation is still quite high, which is not very good news. And this just indicates that these macroeconomic headwinds are so strong that the tightening monetary policies are doing little from leading it to affect inflation and causing it to jump the way it did. And looking here, the last sort of massive jumps were in 1974 and in 1980, and this was caused by OPEC forming and limiting the supply of oil. So the prices of oil shot up, causing inflation rates to reach as high as 14%. It's not as bad as it was in 1980, but we saw an increasing rate, and thankfully in the past month inflation rate has gone down by only 0.3%. However, maybe this is the start of the decline of inflation, but it doesn't seem to be that way because the macroeconomic headwinds are so strong that I believe that inflation is going to continue high, and we will face increasing pressure in prices, at least for the next few months, before some of these issues get solved. So $140 oil is the level to watch as a recession indicator. A sustained high price for crude oil could tip the economy into a recession, and it's believed that $140 per barrel is the magic number for economic growth to turn negative and a recession to take place. So anytime since the 1970s, when oil prices have gone up twice in 1 year, a recession followed in the next 12 to 18 months, and this has already happened. So we expect a recession sometime soon. However, if the price of oil can stabilize and go down, we might just be able to put off a recession. And this increase in the price of oil, as I said before, is due to geopolitical tensions between the West and Russia after a certain invasion, and also lingering issues relating to the COVID-19 pandemic, which have to do with the fact that supply chains were massively affected, production was down, oil wasn't being shipped as fast as it was, refineries were slow to process the oil into fuel, and which caused the price of oil to significantly go up due to increasing price pressures. Decrease in supply while the demand increases, obviously it will cause the price to go up. So the prices had decreased for quite a while, but then it shot back up, and this is due to a political created surplus of oil in the market, so that the price of oil goes down. So if the demand is too high, then they need to increase the supply so it's above that demand so that the price decreases. By this, fundamentals weakened in April to May. There have been record large US strategic petroleum reserve sales, which means that a lot of oil has been put into the market from the US reserves. Also, Chinese lockdowns brought the market to its first surplus since June 2020, which means that these lockdowns have caused a decline in the demand for oil in China, and China being a major consumer of oil and oil-related products, this had a major impact in its demand. And if supply is increasing while demand is decreasing, the price goes down. However, this politically created supply is already ending. It's driven by the ongoing recovery in Chinese demand because now the lockdowns are ending, and this is causing life to go back to normal and the demand for oil to go back up. Also, there will be a expected 500,000 barrel per day decrease in Russian oil production following the European ban on the imports of Russian oil. These factors are going to cause the price of oil to significantly go up, and it will definitely go up because demand is increasing and supply is quite weak. And the US cannot use its strategic petroleum reserves for much longer because it has put in so much oil into the market that the reserves are depleted now, so they have to maintain a certain level. So all in all, the price of oil has been facing upward pressures, and we might see it reaching the $140 level. I hope not, but it's looking likely. The Department of Justice in the US recommends international cooperation in chasing down crypto criminals. So its chief lawyer, Merrick Garland, is asking for more international cooperation to protect investors, consumers, and businesses that use digital assets. And he calls for sharing more information with foreign law enforcement agencies. And this is just because crimes facilitated by cryptocurrencies are often much harder to prosecute than those wrapped up in paper currencies. And this is due to lack of regulation and the decentralized nature of cryptocurrencies. And many criminals, such as money launderers, terrorist financiers, and sanction evaders, are using crypto to commit their crimes, and they're taking advantage of an unregulated system to do so. But there is a bright side to this, because blockchain-based transactions are permanently recorded on distributed ledgers, which are publicly available for anyone to see on the internet. This creates more opportunities for law enforcement officers to follow the money in ways that are not possible with traditional finance systems. There are challenges in this, but also in the challenges there are also opportunities. These opportunities can be taken advantage of if there's a team of forensic accountants or forensic investigators that are equipped with the skills to investigate blockchain-based transactions. If they have that and they can do it on a global scale, let's say that the US is the first to develop these skills, they can train law enforcement agencies all over the world, increase cooperation, and make it very, very difficult for these criminals to get away with their crimes due to the fact that the blockchain-based systems are decentralized and publicly recorded. So decentralization, which is a factor on why these type of crimes are very high or very prevalent, is also a way to end these crimes or minimize these crimes. And with that, we reach the end of today's video. Thank you very much for watching. If you enjoyed the video, please consider leaving a like, hitting the subscribe button, and sharing this video with your family and friends. Invest wisely, and cheers.